content on this channel is for education and entertainment purposes only. It does not constitute financial advice. Always remember to conduct your own research. The two pies that build my portfolio. This is the ultimate guide to seeing exactly how I build my portfolio using the trading 2-on-2 pies. How I balance high yield income with safer growth for long-term financial freedom. So before we get started, I just want to run through, this is not financial advice, this is just for educational purposes only. Always do your own research. Just remember, I am just a guy on YouTube at the end of the day. I'm just sharing what I do with my own portfolio. So let's get right into it. How is my portfolio split? So I have two pies on trading 2-on-2, which splits the portfolio 50%. So we have 50% in the safer assets pie, 50% in the high yield pie. And this is to balance out the long-term growth plus the dividends compounding at the rate that it does. So let's have a look at the safer assets pie to start with. So as you can see, the allocation within the pie so far, I just want to say anything that you see in the pies will be set to 50% double of the allocation. So if we look at, for example, GGI, the allocation inside the pie, the safer assets pie will be 20%, but that is only 10% of my total portfolio because the two pies combined, which is 50% of the portfolio in each. So I just wanted to say that just so you're not confused when it comes to reading them out. So let's start. We have GGI, we have allocation in the pie 20%, and then it's 10% of the full portfolio. EQQQ, allocation is 20%, which equals 10% of the full portfolio. MasterCard is 10%, which is 5% of the full portfolio. Broadcom is 10%, which is 5% of the full portfolio. Main Street Capital is 10%, which is 5% of full portfolio. And Meta is 10%, which is 5% of the full portfolio. So as we have a dividend growth fund in there, GGI, which is on global equities, which has done great long term. It's had 300% total return. That's over 10 years. That's the reason it's in there. Then we have EQQQ, which is a growth ETF on the NASDAQ 100. Done absolutely amazing. 500% on the 10-year. MasterCard has done absolutely amazing as well. Same for Broadcom. I think Broadcom's done 2,700% over 10 years, which, I mean, it's just absolutely outrageous. Main Street Capital is up 1,600% since inception in 2008, I think it was, or 2007. And Meta, really, really good solid company, which I think has got a lot of growth in it. Moving forward, these assets I've chose because they've got strong dividend growth, they've got solid fundamentals, really solid companies. I don't think MasterCard, Broadcom and Meta are going to struggle within the next 10 to 20 years. So that's the reason I'm investing in these companies. Long-term capital appreciation. This is what this pie is about. I limit single stocks to 5 to 7% and funds to between 10 to 15% across the whole portfolio. I don't like to allocate too much risk into one. That's why I've set them out the way they are right now. One can go higher, one can go lower. It doesn't really matter roundabouts. It's just I try to limit them to roundabout these allocations long term. Right, let's get into pie number 2 then. So pie number 2 is again 50% of the portfolio. This is the high yield income pie. This is the income engine that's designed to snowball monthly dividends. So we have the first allocation is YMAP, which has done absolutely amazing since inception. I think it's beating the QQQ so far. So only good things to say about this fund so far. The allocation in the pie is 20%, which is 10% of the total portfolio. Then we have JEQP, which is 20% of the pie, but 10% of the total portfolio. JEIP, 20%, but 10% of the portfolio. Then we have MSTY by YieldMax, which is the MicroStrategy fund. That is 10% of the pie, but 5% of the total portfolio. Then we have Coinbase ETP, Tesla ETP, and Nvidia ETP. So these are all 10% of the pie and 5% of the portfolio. So Coinbase ETP and Tesla ETP, I want to see how these perform with the new strategy because Nvidia ETP is doing okay anyway. Right now it's recovering its share price. We're still getting paid dividends. I am up quite a lot in total return on Nvidia ETP, as I know a lot of other people are. So these two are the ones that I generally want to watch with the new strategy because they've sunk quite a lot and they're not catching upside that good. So these ones, we'll watch the new strategy, see how it plays out, but it won't surprise me if the new strategy didn't work and we have to sell out of these. So let's see what happens long term with that. I really hope it doesn't come to that, and I really hope income shares pull the new strategy off, which all years so far, and they've got a lot of hope in the new strategy. They've done a lot of backtesting, so let's really hope that it works out. So this pie is designed for high monthly income, ideal for accelerating dividend reinvestment, taking advantage of cover call strategies and building income without selling shares. So this is the kind of idea of that I want to do. I want to live off a portfolio long term without selling any shares and just let the dividends roll in and me live off of them eventually. But while we're getting some solid capital gains at the same time would be the ideal scenario. So I just want to run through the portfolio rules and strategies round about what I do when I'm covering my own portfolio within these two pies. So the first thing I do is I never auto invest inside the pies. I would buy externally outside the pie. I don't really like how the pies are set up on 212. So when you put £100 in and then say it buys 5 assets, I don't really like that idea. I like to buy externally. I can check the price, get a solid good purchase, and then you can import it into the pie so you know exactly what your cost basis is on that asset. So that's the reason why I do that. I don't auto reinvest dividends into the pie. I turn auto dividend reinvestment off on this pie because I like to manually drip back into the same asset. So let's say MSTY's paid me £200 this month. I would like to auto reinvest that back into that fund to see the actual total return what I've got rather than just reinvesting it back into the pie. I like to manually drip it back into the same fund to control exactly where the dividends are going. So I hope that makes sense, the reason why I do that in this pie. I never rebalance again. I use self-balance over time. So when you're adding assets back in, it's going to add to the underweighted ones. Same again with the exit plan as the last video that I did on the monthly income pie. If a removed asset is in positive total return, I may sell it to lock in them gains. If an asset is negative, and that's the reason why I've removed it out of the pie because it's not working, I will export it from the pie, hold it in my brokerage until it turns positive on total return, and then I would review the situation and sell it. But right now I am watching income shares very, very closely to see if their new strategy is working, and I may rotate more of that into the income pie, into the high yield pie, into the income pie, etc. if we see this strategy working. But until they prove to me that this strategy works, I won't be adding a single thing. So a little visual on my whole portfolio. We have 50% safer assets, and we have 50% high yield. And that is how I'm doing it with these two pies. So this is my final thoughts. Right now, we are 50% into growth, 50% into income. But as European income funds evolves, I will most likely shift into income over growth when we get those quality funds that are hopefully coming by Euromax and other fund managers. But until that happens, we have to use growth, unfortunately, to create that nice balance, because in America they just use income funds and they're working pretty solid so far. But we don't have that quality, unfortunately. So it's just a matter of time. In the next couple of years, they're all going to come over, and I really can't wait for that time. We've got the stability from the dividend growers, the cash flow from the high yield, which is a mix for financial freedom eventually. So thank you guys, hope you liked this video. If you did, please give it a like, please subscribe to the channel, and I will see you in the next one.
Talk about Snowball. If you want 10% off Snowball, please use the promo code below and my link below, Cashflow King, to get 10% off. If you would like to use my pie so you can invest exactly the same as I do and the rest of the people who have also copied my pie, a lot of people have also pulled the trigger on this. If you want to join a Discord also with other like-minded investors, you can do that. Join our Discord, guys. Let's get talking.
Please remember to hit that like and subscribe button, guys, and also hit the notification bell to keep updated with future video. Thank you guys, and I will see you in the next one.